Hey, this is Investor, and for the past 3 weeks, we have seen the situation in Iran escalate, and right now the markets are in total chaos. But counter to what you're hearing on mainstream media, and almost counter to your natural intuition, what we have right now is a setup that's being created that is about to generate one of the greatest investing opportunities of our lifetime, certainly one that we haven't seen in decades. And I don't know when the next time we're going to get something like that. So, as you notice, the markets have this bipolar behavior. One day, President Trump says about negotiations, the markets fly up, oil flies down. Then the Iranian regime says, no, there's no ceasefire, we don't agree. Oil spikes up, markets go down. And every day we have this seesaw of bipolar overreactiveness by the market, which stems from uncertainty. The markets are confused. But in this video, I'll show you my plan and what smart, intelligent investors are doing right now to set up for what's being created. Unfortunately, most retail investors are not going to see the forest from the trees. They're going to be so consumed with headlines and short-term speculation and fear and greed that they will miss out on what's about to be created, because this is just the beginning and you ain't seen nothing yet. Now, in this video, I'm not gatekeeping anything. I'm going to give everything away right now absolutely for free. I'll show you how this opportunity is being generated and how smart investors are going to use this to create generational wealth. The relationship between oil and stocks. There's a very interesting relationship between oil and stocks. A lot of people tend to say that the relationship between bonds and stocks is very important and often misunderstood, and that is true. But the relationship between stocks and oil is probably even more important, and I'll explain why. When we have a war in the Middle East like we have right now, what happens is we have interruptions in the supply of oil, specifically in the Strait of Hormuz, which houses 20% of the global oil traffic in the world daily. So as the Strait of Hormuz is blocked or closed or blockaded or interrupted, what happens is we have a lot of uncertainty about the flow of global oil, which means prices go up. And if oil prices go up, what happens? Well, we have increased fear of inflation because everything we consume needs oil, needs energy. We need energy to produce goods, to move those goods from point A to point B, etc. So the higher the oil prices are, the more we have fears of inflation. And if inflation comes in and hits us when the economy is already shaky with bad job numbers and a lot of macro uncertainty, well, we have an increased risk of recession. And if we have a recession, that means the stock market collapse is now becoming a risk. Not certain, but definitely a risk that has to be priced in. So oil prices can quickly take us down this rabbit hole and bring us to a stock market collapse. The 1970s nightmare, the worst case scenario. Now, not every oil price spike in history has caused this, in fact very few, but certainly when this happens, the risk gets priced in by the stock market because the stock market is very, very future facing. Whenever we have the smallest, tiniest risk, it's always going to get priced in today based on the absolute worst case scenario. And the worst case scenario is what we saw in the 70s. In the 70s, we had a weak economy, we had inflation, high oil prices, and high interest rates that took us into a massive recession that took years to fix with Paul Volcker and the Fed. This was a stagflationary nightmare of the US economy in the 70s. And when everybody is right now looking at the situation, the fear is that this may play itself out in 2026. That is the fear that is being priced in by the stock market. Even if we're not even close to this, the fear and uncertainty will always get priced in first, and then as we go forward, the stock market will start to slowly de-escalate. The Federal Reserve is locked out. The concern is that if oil prices do not come down, if the Strait of Hormuz isn't open, and if the prices of oil do not come down, what happens? Well, then the Federal Reserve, which is currently in a quantitative easing cycle, essentially putting more money into the market, by lowering the interest rate will have to say, look, folks, we would love to help the economy and put more money in to prevent us from crashing, but we cannot. Because if we do not increase rates right now, what's going to happen is that the oil prices that just spiked might bring us back to inflation territory, which we actually just came out of. So instead of cutting rates and putting more money into the system, the reaction of the Fed to elevated oil prices, if they become sustainable and long-term, is increasing the rates, just like Paul Volcker did back in the late 70s and the early 80s. And when you increase rates, the money supply in the economy goes down. When people have less money, businesses can borrow less money, and that starts a recessionary cycle and a stock market crash. Okay, this is the worst case scenario of the economy, and right now this uncertainty is being priced in by stocks. That's why you're seeing these parabolic spikes one day, then complete crashes the next day. Everything is just chaotic. Where are we right now? The numbers? If you look at what happened since the beginning of 2026, we're now at the end of March, and what we're seeing is that oil is up 35% because of the war with Iran. Nasdaq is down 6%, 6.25%. The annual return of the S&P is 10%, but now it's down 4% in the quarter. So both tech and the overall broad market index are down 6% and 4%, while oil is spiking. Now, this is on top of what I call sluggish macro, because we've seen job numbers not being great before the war even started. And right now, what may happen is this may cause a prolonged pause by the Federal Reserve to not further decrease rates and help the economy, and maybe eventually an increase in rates to counter the effect of elevated oil prices. As long as oil prices stay elevated, the Fed is locked out from helping the stock market. The Fed cannot reduce interest rates while oil prices go up, because this is an inflationary recipe. When oil prices spike and you decrease rates, you're creating inflation. So for the Fed to help the economy by cutting rates and putting more money into the system, oil prices must come down. And as long as the war continues with no solution in sight, the stock market is going to keep pricing this in. That is why when Donald Trump posts saying we have negotiations with the Iranians and we're making great progress, you see the price of oil plummet. The next day, the Iranian regime says the opposite and oil prices spike again. There is an internal geopolitical battle between Trump and the Iranian regime. They want to spike oil prices. He wants to keep them down. The three options for smart investors. Where does this leave us as smart long-term investors? We really have three options right now to choose from. Option 1, keep holding and do nothing. Let it blow over. Option 2, buy more. Essentially, buy the dip. Option 3, sell, get out, wait until this whole thing blows over, wait until the smoke clears, and then go back into the market.